Hey everybody, welcome to Trading Capital's exclusive analysis. Today is currently November 8th, and as we jump into the charts, we're going to be touching on the major indices first, starting with the SPY ETF, the SPY. Notice the volume was extremely light today, 61.51 million shares. We are on a declining volume trend over the last three sessions, so the markets have just been grinding and floating up. One thing about this candle formation on the daily is this is now a daily hanging man candle. After a daily hanging man candle, it is notorious that you often see downside. I'm not saying we can't go a little bit higher, but typically after this hanging man candle, you usually get a little bit of a gap up and then that reverses in price action. What I think could transpire is maybe tomorrow we float up into this gap and then we start to reverse. But you have to start considering the fact that we're probably going to see a pullback in the major indices. Why is that? Well, look, 1, 2, 3, 4, 5, 6, 7, 8 days up in the SPY, the S&P 500. That is definitely getting overbought in the short term. You look at the QQQ, for instance, as well. The Qs are also trying to hold this breakout level. It is luring a lot of investors in the fact that you got a daily close above this. You have not confirmed this daily breakout candle yet. And once again, you got a daily hanging man candle that is typically a bearish signal for the market. One thing that I think we could be seeing is a capital rotation trade. I think that there's a strong chance we may see capital rotate out of the QQQ S&P 500 companies, so the mega cap and large caps. And I think maybe there's just a small scenario that it might rotate into the IWM. So what I'm looking at is potentially a pairs trade where you go long small caps and you short the big mega caps. One thing that I'm looking at on this IWM chart is this beautiful inverse head and shoulders that is potentially forming. And I say potentially forming because it has not completed this right shoulder. But if we get some sort of a curling price action that breaks this neckline, then it's off to the races for small caps, and you will have quite a substantial squeeze in a variety of names, bringing you all the way up to 186. But until it triggers this neckline and you see this rounding of the right shoulder, you have to still assume that there's bearish price action for the small caps. Why is that? Because you're under this long-term trend line here. This was the big level that you actually broke down at. You did trigger this head and shoulders, which had played out. But right now, it's looking like you might be forming an inverse head and shoulders for the small caps, and we could see maybe the larger mega cap companies start to see some rotation. If you look at some of the stocks that are completely extended, look at this Microsoft chart. Just an absolutely parabolic move. You had that inverted head and shoulders, broke the neckline, and you've just been screaming higher ever since. The measured move for this inverted head and shoulders is just a pierce of the all-time high. I do believe that is a fantastic short trade opportunity for Microsoft. You look at the dollar today. We'll touch base on the DXY. The DXY actually tried making a new intraday nominal high, but the fact that it got reversed and slammed right back under this major resistance area is showing that, okay, maybe we're going to retest the lower boundary range here, and that typically would be positive for the markets if the dollar was to still fall a little bit lower. But with Powell still speaking tomorrow, I believe he's at 2 p.m. Maybe we see a little bit of a morning rally in the indices and then a fade in the afternoon. That's kind of what I'm expecting. Another reason I think this market is going to see some downside. They say semiconductors are the heartbeat of the market. And look at this beautiful, beautiful, beautiful chart that is occurring in the SMA. So if you do a parallel channel from these major pivots and you drop it down, look what we're hitting right now. You also have this undecided doji candle. Yes, it was an up day. The volume is starting to increase in the semis, still under the 20 moving average daily volume, but you're at resistance. This notoriously acts as mega resistance every time you've hit the top end of the channel. And I'm a firm believer that I find it very difficult for this pattern. I don't think it's going to break out to the upside because you've had such an extended move in such a short period of time. So not saying the semis can't hold up here and consolidate. If we were to get some lower price action, I think that would be a little bit of a better setup for the breakout opportunity. But right now I have to lean very, very short term in the next week, absolutely bearish on this market. We've actually started accumulating SOXS. That is a double levered ETF of the semiconductor shorts. So I do think semis are going to fall. Obviously, we have to be aware that NVIDIA still has to report earnings. That's set to report next week Tuesday, and that's the 21st. So that's certainly going to be market moving. But again, Nvidia is another one. If we just simply remove all of these trend lines, you can see that Nvidia is on watch for a breakout. Now it hasn't officially broken out. You haven't confirmed, but it's on watch. But again, typically speaking, from my experience, when you have a 1, 2, 3, 4, 5, 6, 7 day rally in a row, you don't often break out of this resistance without some sort of a sideways bull flag pattern of consolidation. And again, notoriously speaking, if you look at this measured move from the high to the low, Nvidia has basically done that measured move a little bit more in such a shorter period of time. From my experience, whenever you have this vertical ascent, often price action comes right back down and reverts. Now, there is a scenario in Nvidia which I would love to see. If we got a pullback, boom, to say about this gap fill 423, that could be potentially setting up a little bit of an inverted head and shoulders pattern, which would absolutely send Nvidia flying. So maybe in the next week or two, we see the markets pull back into this area, Nvidia as well. And then imagine if Nvidia actually triggers and breaks this inverted head and shoulders. That would just be a massive, massive move for Nvidia. We're talking about another 17% on a multi-trillion-dollar name. I'm not saying that's going to happen yet, but we have to watch for the type of patterns that are at play. Looking at gold. Gold had a little bit of a sell-off here. We have been prepping you. We think that this head and shoulders that triggered on the actual intraday 4-hour chart is starting to play out, and you can see that we're almost to the measured move of 1928. I do think that there's a shot that the gold chart could actually retrace all the way back down to this parallel channel where I would be a buyer likely in the low 1900s. I think that there's a strong chance that gold can actually fall back down to here. And then I think it can have a big, big bounce higher all the way up to the high 2100s, maybe even piercing this little bit of a wick high over here before it pulls back, and then it makes new all-time highs later in 2024. But I am leaning bullish on gold over the long term, just short term, a little bit bearish in the near term on gold. If you look at yields, the 10-year yield, actually, there was a little bit of an auction today, but yields softened up again. Yields are testing that low wick. I think yields are still in a longer term technical uptrend. But now that we're closing underneath this long-term trend line here, pivot in 2018, your pivot high in 2022, and now you're actually looking to close back below that. Now, if we get a close below this wick on a weekly basis, you're going to test this previous wick high at 4.32. That might be enough to give small caps a little bit of a near-term boost. But I still think that there's a strong chance that yields could basically maybe, let me just draw this out here. I think yields could actually fall, get another bit of a boost higher, and then we'll just have to see. But again, I do anticipate at least a bounce here at 4.33. That's probably the lowest we're going to go in the near term before we get a little bit of a technical bounce, maybe back to 4.63. And then we really have to watch to see what yields, especially on the long end of the curve, do under this trend line. Do we get an actual weekly confirmed break? That's what I'm watching this week. It's going to be extremely important to see if we get a weekly confirmed close back underneath this trend line. You need a weekly close below this wick low for this confirmed this would be a failed potential break in the overall long-term yield market, which does show that maybe the economy is slowing down and investors are prepping for a little bit of a recessionary fear based event that could cause people to flee to bonds as a sign of safety. All right, let's touch base on Bitcoin now because it has been a mover. Bitcoin trying to break out and keep going higher. It actually pierced. It did not make a new high in the cycle, but it's making a new high compared to yesterday, and it's trying to make a new little bit of an all-time high in this uptrend of a cycle. I still think Bitcoin is at some mega resistance. I think that this pattern is not really bullish consolidation on the Bitcoin chart. It's more of a wedge pattern that I do think is going to break down two levels, 1, 2. I still think you get a retrace to 31.8. 2, I actually did stop out of my Bitcoin short at a break even just to see if we get a little bit of a one last final pump up here in Bitcoin. And if we get a pump up in Bitcoin through this trend line, I will be looking to accumulate BITI on the short side yet again. But it's certainly been an interesting time for the crypto market. Things have been moving in favor of the overall crypto market. Even if you look at the total crypto market cap wielding 1.32 trillion, you're actually trying to break out of this beautiful parallel channel. Major pivot, major pivot, major pivot, and look where you're at right now. You have not confirmed the break, but there's some momentum in this crypto space that is trying to get you above this huge resistance point. I actually have a measured move of 1.38 trillion in the total crypto market space, so maybe that there is a little bit more upside in the overall crypto market before you have a definite short trade opportunity. So we're looking at maybe another 5% or so in the overall crypto market. But this market is extended. You have to wonder who is going to be buying this market at this major resistance level. And again, not saying we can't hold here, but you often don't break out in the major indices once you've had a beautiful parabolic move. So I'm leaning slightly more bearish. Let me just see if there's anything else I can touch base on. We'll go through natural gas here and then oil as well, because that's been super interesting. Natural gas has been getting clobbered. You are holding technical support. You did pierce this channel today and you hit this double bottom low here. I think natural gas retraces to 334. So maybe you get another little move here. And then I do think that you actually start rolling over in natural gas to retrace back to this pivot high that I have my eye on for a potential long trade, accumulating nat gas on the long trade. I'm thinking that maybe there's a chance that we see nat gas kind of retrace to this area over here. Let me just draw these pivots in. I'm thinking that it may correlate with this convergence of these two trend lines. You have this flat bottom trend line with two previous pivot high reversals, and you also have a major pivot, major pivot, major pivot that could confluence there. Call it the end of November, where maybe we see nat gas hitting this potential area. So time will tell. It also happens to be a 382 fib retrace. So that's a multi-factor trade that I'm looking at on the long side of nat gas. Oil has been clobbered. Obviously, everyone and their mother has been watching this head and shoulders pattern. The head and shoulders pattern, let's just do a quick measured move downside target. If we look at the neckline here where we broke, you can see that oil has a straight shot to 68.80 on the chart. So I'll just actually mark that in, but you are approaching some pretty big technical support in oil at this point in time. This blue line is the daily 200, which you've actually pierced and broken and confirmed below. That typically signals bearish signals for the market. But overall, when you pierce the 200, you often get a retrace back to that level to see if bulls can recapture that longer term moving average. I still think that you retrace back to this downsloping breakout trend line. So if oil got one more flush into this level, I would be a buyer for a quick day trade, maybe a swing trade bounce. You can look at energy equities as well on the long side, but I do like oil as a potential day trade if we get a flush tomorrow or the next day into this big technical level. So keep your eye on oil because it's certainly shaping up to be very interesting. You know, there's also this long-term COVID trend line, which we can mark from the low, and you can see that it pierces right in that zone. So that will be a big level of support. You can see we're approaching it closely. Maybe one more flush into this level and we should get a bounce in the overall oil market. So it's interesting to see that oil has really been falling off of a cliff. So there's certainly some demand destruction that is occurring underneath the hood of this economy. And we'll just have to continue to watch it very closely, since it is an important inflationary indication. It's an important metric for consumers, and certainly it makes the tailwinds or headwinds either stronger or weaker depending on how oil is uptrending or downtrending. Right now it's downtrending, which is inevitably going to give underlying stocks and companies a boost on their margins because it makes things cheaper on their operating costs. So watch oil closely. It's certainly shaping up to be very interesting. I have a bunch of new trades that I'm looking at on the long and short side, but again, since the market is on at major resistance, you have to naturally favor some sort of a small pullback, at least in the near term. Even if we look at Apple, let's discuss Apple quickly. Look at this pretty impressive move on Apple. Apple has actually broken out of this downtrend, but you're into this major pivot high double top zone. You actually got a beautiful daily close above it, but now you're into this wide range red bar breakdown. So this is a big level for Apple. and we have to really see if Apple can start getting through here. Let me just throw in a fib retrace to see how much resistance we have to eat through. You can see on Apple, we're approaching that 50% retrace of this, basically this high to this low. We're closed above that 50% retrace right now. Will we confirm above that? If you confirm above it, next stop is 185.79 on Apple. But right now, I still think that this is a healthy resistance, and I would not shock me if Apple actually falls and retraces back lower to either the next fib at the minimum, which is 178, or even this breakout trend line. So that's where I think we could see Apple retracing to, is if you take this trend line here, you get a fall, a retrace right into this 382 fib, and also this downsloping trend line. That would be a healthy pullback in the short term for Apple. On that note, definitely follow my trades at tradingcapital.ca if you're interested in some of our personal trades and our trade alert service and daily analysis videos for our members. Give me a follow, check out our website, and we'll try to help you make money in this market. Take care, everybody. We'll see you on the charts a bit later.